Welcome back. An unexpected move at General Electric. Former CEO Jeff Immelt announcing he is resigning as chairman of the company's board 3 months ahead of schedule. The stock, as you see there, was up on the news in after-hours trading. Current CEO John Flannery will replace Immelt as chairman of the board. According to the industrial giant, John, tell me what you think of this move. This is sooner than anybody thought, right?
Sooner than anyone thought, but this transition has been going on for a few months, so I don't think it fundamentally changes the direction of GE. You know, I think that it marks a moment that with the end of the Immelt era. I think it marks a moment to talk about what GE tells us about the U.S. economy. You know, he took that position in
2 days after September 11th.
2 days after 9/11, right towards the tail end of a recession. GE is a window into the U.S. economy, and I think, you know, what his era kind of marked a really low point for the U.S. economy. He started right as we were going into a period of really slow economic growth, and that showed up in GE's stock price.
But I don't think you could blame it all on the economy, John. I mean, GE has gone through fundamental change. Well, Jeff Immelt decided to sell major assets to change the makeup of the company. That was on Jeff Immelt, not the economy.
It was on Jeff Immelt.
Stock down 25% under his tenure.
Which underperformed the broad market, did it not? That's an underperformance.
Oh, it sure did.
For sure.
Yeah, so, during that period. But he also had to transition the company away from GE Financial. And I think you put that in part on Welch, because it really built up GE Financial under Jack Welch. Now, he allowed that to continue.
No, they took out half the revenue. I mean, that was half the revenue.
Right.
GE Capital.
And that got taken out during the financial crisis.
So that was the right move.
Right, but again, he ran GE, Immelt did, from 2001 to 2008. So that's a 7-year period.
Right.
How can you put that on Welch? I mean, that was a disaster developing over that 7-year stretch.
All I know is under Jack Welch, the stock was at all-time highs. The revenue was at incredibly strong levels.
But that was a period when the U.S. economy was Jack Welch got out at the right time. I mean, he gets credit for really running the company brilliantly.
Can I raise
he got out right at the right time to get out of that.
But can I raise an issue? Because we viewed covering GE in its heyday in the 90s as it was a benchmark of the U.S. economy because it was so diverse.
And it was. Yeah.
Was Immelt not capable of running a company so diverse? Was it only somebody with Jack Welch's talent who could run it? That he was just incapable of getting his arms around it and being able to see all these disparate businesses for what they were and how to grow them?
I think the knock on him has to be what you pointed out, which is that he didn't see the problems brewing in GE Financial. That became a disaster for him. And he had 7 years to figure out that they were overexposed to the financial sector.
Right. You could say that Jack Welch left it somewhat of a black box where people didn't really understand what GE Capital is. But Jeff Immelt was the boss. How does he not figure it out? Being forced to sell it so many years later. That was a big move, and it completely changed the makeup of General Electric.
What I was trying to point out was that this company was a reflection of the U.S. economy. The whole U.S. economy during this period in the 2000s became too exposed to the financial sector, too exposed to financial excess, and it took down the whole economy, and it actually it ended up being a black mark on Immelt's tenure running that company.
You wonder what happens to the stock now.
Right.
What is it now? What is it now?
It's below 30, that's for sure. Let's check GE shares right here. If we could pull up a chart, Rachel, when you get a chance there. What were you going to say?
I was just saying, what does Immelt do now?
24.57.
What happens to the company now? What are they going to pivot? Are they going to try to get more assets? Are they going to try to acquire different things? Or are they going to try to take off different assets and focus their business case? They've been so broad.
I just want to point out the high of GE stock, which was when I worked there at CNBC, which is at the time was owned by GE, was 59 3/4. That was under Jack Welch's leadership, 59 3/4. So we're at 24 and change. So what does he do now? He was actually being looked at as perhaps going to Uber until Uber's board said, no, he's no longer in the running. Right.
He doesn't have to do anything if he doesn't want to.
But now it's wind turbines and jet engines.
And healthcare.
It's an industrial.
And healthcare.
And oil.
It's so diverse. Is that a good thing or a bad thing?
It's a lot less diverse.
The other thing that he did, I think, that you could potentially question him on is the exposure to emerging markets in the rest of the world. He really shifted the focus of that company to emerging markets, and they had a heyday, but as we know with China and how it's slowed down, that might not have been a great bet in the long run either.
Again, indicative of the broader economy, by the way, the U.S. economy. I will keep talking.